What's up, everybody? It's your boy Orlando, aka King Smitty, and I'm here with the top three stocks that you should buy that's under $5. That's right, all of these stocks are under $5, and they're all showing promising futures. And honestly, the amount of growth it has and it can achieve in the next 5 years is really mind blowing. Honestly, all of them have upside potential in the next 1 year, though, according to analysts of over 100%. But before we get into that, go ahead and like and subscribe to the page. I really appreciate that. Go ahead and share it if you think it's some good advice. Of course, none of this is financial advice. All this is just entertainment purposes. So make sure to do your own due diligence before making any kind of trades or anything like that. But now we got that out the way. Let's just jump into this very first stock. Ticker symbol is ENTX. Company is Entera Bio. Current price is $2.95. Let's look at this right here. See what it does a little bit. It's a promising biotech firm working on an osteoporosis drug. Right? They're trying to instead of having the osteoporosis drug as a shot, they're trying to make it a pill form, in a sense. And it says the FDA had just granted this company a fast track to approval. So now the firm not only needs to pass a 12-month study on bone density rather than undergo a longer-term fracture study. So this is definitely going to speed up growth for this company and speed up the good news to 12-month study rather than an extensive long study that is normally required. So you can expect a positive catalyst to come within the next 12 months. So until then, definitely I could be loading up on this. Let's see what else it says. Reduced regulatory hurdles increase the chance a company can bring a drug to the market. So there it goes again. Them fast tracking them and giving them like the shortcut pass to release this drug is really going to help this company become more profitable a lot sooner than it would be under normal circumstances, shall I say. And then it says it gives the company plenty of room for upside if more good news emerges. And that's what I'm saying. This company, these biotechs, are really just waiting on good news to happen with one of their drugs or some of their medicine that's going on. And the thing I like about the biotechs is recessions don't hit biotechs as hard as most companies, like especially the tech sector. And I'm not saying that these are recession-proof stocks, of course, um, but they are good. Sometimes they don't get hit as hard as most stocks, and they're usually the first ones in the first group to recover. Because the biotech stocks, if they have some good news going on during this recession, I mean, the recession is not stopping them from making money. For example, Moderna and Pfizer, when they was when COVID happened and they had a vaccine for it, it was a the profits came for this company, despite what was going on. Even though that was existing with the cure, not the cure, but the vaccine for COVID, and that's directly correlated. But for the recession, when this happens, technology might take a step back, but medicine doesn't. Medicine is still needed, and things are still going to be needed to figure it out, right? And then you can see, well, you can look it up, but right now institutions hold up to 19.6% of this company, right? So what that means is more institutions, such as like Vanguard or whoever your employer goes through for your 401k or whatnot, more institutions can buy into this. And once the institutions buy into this, some people like to call those whales at times. They're pushing a lot more money into this stock. So as well as the good news, you have bigger companies throwing millions of dollars into this stock, which also help it grow. So stock is getting fast tracked to becoming more profitable, and there's still room for more whales and more institutions to come in and buy some stocks, right? Over the last year, revenues grew 56.44% for the fiscal year of 2021, compared to the 2020 year um, for the company, and that's great growth, but the company's still not profitable as far as their revenues go. But the analysts, they do have this as a buy rating. You can see it right here. It is considered a buy rating by 4 analysts with a 12-month price target of $6.75. Right, $6.75, and the price right now is $2.95. So you can see right there that's a 129% return on your investment right there. Great, right? And that's only 1 year. And like I said, it takes them 12 months to get past those trials. That 12-month study, it takes, like I said, a whole year, and that's the price target is $6 in a year. So once they get that drug out in the market and they're getting profits coming in, I could definitely see this stock shooting above $6.75. I could easily see this stock going to like $10 or something like that. But the professional analyst has it at $6.75 for the next 12 months. 29% return on your interest. Yeah, so let's take a look at this chart right here. As you can see, we have ENTX, Entera Bio, and you can see it's been on a downtrend. Let's actually get a trend line going on. We'll start it from right here. No, we'll start it from up here. That's fair, I feel like. No, that's a little too high, actually. Yeah, so I'm sorry. We'll start the trend line from right here, and we'll go like this. Boom. Let's drag it out a little bit, and then we'll have, that is our resistance line. As you can see right here at 6,000, what is that? 36 cents. It got there and it rejected. Same trend line. Boom. I made the resistance line. It got there, 577. It rejected. Came back down. It tested again. Came back down. Tested again. Tested again. Came back down, and it finally broke the resistance line. Right. As well, let's draw a support line. Let's see if we can get one of those going on as well. We'll draw from here. Boom. Let's drag it out just a little bit. Oops, I forgot to click it. And this is what you would call technical analysis, right? Looking at this chart like this. So you can see it hits right here. Once it rejected from that 577, it hit at 420. It came up. It didn't hit the resistance quite yet. Came down, went up. It hit the resistance line. Came down and touched the support line. Supported it back up. Touched the support. Kind of flirted with it for a little bit. Kind of pushed it back up a little bit. Hit support again. And now it bounced back up. And now it's hitting resistance. And let me zoom in a little bit. And if you can see right here, it really broke resistance. And it's above, what is this? Our 50-day simple moving average as well. And it's above the 100-day simple moving average. So those are two bullish patterns for a chart. To break resistance means the stock could run, especially if it gets over the 200-day moving average. This stock could really make some moves. And now that you can see it's kind of an uptrend a little bit. So we're going to draw another resistance line. This is a shorter term resistance line than what we're looking at. And boom. And so you can see it hit resistance, came up, and these are higher lows. It was low right here, it came back down, but it's higher than what it was down here, right? Then it comes back up, and then now it came back down, but it's still higher than what it was right here. So all these are like bullish signs in a sense for this chart. You can see the RSI is at a, what is this, a 60, I doesn't say on the phone, 65, so it's not quite overbought yet. Once it goes overbought, you could probably expect a little pullback, a little quick one. You can see right here though, on the MACD line, it's crossing, that blue line is crossing above the red, which means we can have another little bullish run, a little small one coming soon, right? So that's the technical analysis on there. I would say, definitely if it pulls back and it touches this resistance line, because this resistance supports. Once you pass resistance, that previous resistance line can become a support line. So if it goes above that and pulls back, I definitely put a little buy marker in. I had one at $1.90 something, I believe, or $1.60 something, in case it pulls back really hard with the overall market. But if it doesn't, I'll probably put one roughly around, let's say about $2.33, $2.46, somewhere around there. But that's a technical analysis on Entera Bio. The next stock I want to talk about is ticker symbol BNGO. That is Biogenomics. What's the name of the company? Biogenomics. The company provides optical genome mappings, OGM, for genome analysis. The company offers a diagnostic service to physicians, specialists in the medical management for individuals with genetic conditions such as pediatric neurodevelopmental disorders, and including the autism spectrum disorder, right? So their information helps better assess that and to catch it, and gives better advice, not advice, but better object. How can I say this? They provide assistance with analyzing what's going on, and how better we can or they can assist with the issue. They being the doctors or the specialists, right? And let's take a look at these. You can see genomics, should I say, gets 2 U.S. patents related to the U.S. Related to the optical genome mapping technology, right? And you can see right here, the company has successfully secured 2 patents that expands the patent protection for the use of the nanochannel arrays in genome analysis. And then it goes on and says the company is a market leader in optical genome mapping solutions on the Sapphire system, which is the one that assists with neurological disorders, and the provider of the NX clinical software. And I'm assuming that's a software that comes with the Sapphire. I would have to do a little bit more research into there just so I don't say something that's incorrect. But I would definitely look that up. And it says these patents will help the company expand the type of work they do. So they've already have the field that they're in for the mapping, but with these other 2 patents, it'll help them go into other fields. You can see, which includes being used in the studies of microorganisms, plants, animals, and human diseases. So maybe this could help them find cures and solutions to other diseases that's out there in the world. And you can see right now this company is only at $1.98, right? The company has 27% institutional ownership. That is larger than what Entera Bio had, and this is another type of biotech company in a sense. But there's still room to grow. Like, there's still room for more institutions to grow. It's not like it's like 90% institutionals or 80% institutions. There's still room for bigger institutions to come in and help push this price up for us. And it says Biogenomics Inc. revenue grew 111.47% in the fiscal year 2021 as compared to the same year, or as compared to 2020, shall I say. Although, just like Entera Bio, this company neither is profitable. Even though they had a 111% growth in revenue, the company is still not making a profit as of yet. But the analysts, let's see if I have it up here, they had this as a strong buy. And the price target is $7.50. The current price is $1.98. That's a 279% return on your investment. In 1 year, the company probably still won't be profitable. So just imagine, as they get more patents and they expand their services to more parts of that field, and be able to locate more information, a little bit more detail on different diseases, and be able to help solve this, how much more revenue they'll get coming through as the Sapphire gets sold more to different hospitals, different private agencies, private doctor offices, how much more revenue they'll get once all this starts to go into play. And yet, next year they have a 279% return on investment for this stock, $7.50. So, like I said, this is another stock that could easily hit $10 in the next 5 years. And if it's hitting $7.50 in 1 year, it could probably blow through that in 2 years. So, these two are definitely long-term plays for me. Let's see if we can look at some technical analysis for it. But actually, before we look into the technical analysis for this play, I have one more article. It says there was a study that shows the possibilities of optical genome mapping and why labs around the world are adopting it. So why they're getting more clients, more customers. A new study using OGM in combination with multiple other cytogenetic methods and a new single-cell analysis method as a comprehensive molecular strategy to characterize the genomic variation in B acute lymphoblastic leukemia. So right there you have another, their technology has helped or is helping with another more information for another disease, which is cancer, right? Lymphoblast leukemia. And it says this improves the odds of biogenomics having a quicker penetration into the cytogenics market soon. It also means that it will likely see a higher adoption of the Sapphire system, which is positive news for the company's commercialization plans. So, like I said, it reach more diseases and more things that are right now that in our mind are incurable. As long as they're able to help assist with getting more information and help being a positive force in that field, this company definitely has bright upside. It's a huge upside for the biogenomics. And I do believe this is one of the plays that Cathie Wood has as well. I think I did get this off of one of the ARK ETFs. You can definitely check which one it was. I forgot. I think it might have been AARQ, maybe. Yeah, I was going through one time just researching companies that she had in there, and this one struck my interest, right? For biogenomics, you can see right here another chart on the downslope in the long run. Let's see if we can get a trend line going. We'll start right here. Alright. And let's get another one. So that was the resistance line. Now we're going to get a support line going. And we'll start right here. Boom. So as you can see, it's not near really the support or the resistance lines necessarily. And maybe I could draw this a better resistance line, honestly. Let me not move the whole thing. Let me put this right back up there. And let me just move this a little bit like this. Because sometimes it does break out of the resistance line. But you can see it's a lot closer now. So you can see the stock isn't near any type of resistance or support really. It's in the middle. But what I have noticed is it looks like it is in a consolidation period. Possibility? I think so. If you come over here, when was this? When the stock started running, you can see what date is this? December 3rd, 2020, when I was doing technical analysis for it back then. You can see the stock on the 30th, it could not get above it. And then on, what's this, December 31st, it came down. It kind of went below it a little bit, but it closed above it, right? So it's not the strongest support and resistance line, but as you look to today over here, it definitely shows like a mini top. You can see right here, it kind of closed a little bit above it on this day, and on this day before it, it kind of closed right. I'm sorry, yeah, they both closed right above it, shall I say, but really close to being like exactly on that line. And now it's using it as a resistance line. You can see it couldn't cross, and it's coming back down, and so now you can see the bottom clearly right there. Touches, it's coming back down, and it probably touches again. So you see, it's kind of consolidating right now for the past. What is this? Since January, we say since January 24th to today, the stock's kind of been consolidating a little bit, and I have buy orders at 165 for this for sure. Every time it touches that resistance line, I'm going and I'm trying to grab some up and grab a big position in it. You can see it was getting close to the oversold in the RSI, and as well as the MACD isn't close to crossing over yet. Let's see if we can zoom in on it a little bit, and it looks like maybe the slightest curl right here is starting to happen. Of course, the red one is still going down. It looks like the slightest curl is starting to happen, and as well, this might be like a doji right here, which is kind of like a bullish pattern. We got to see what the chart for the next day looks like. But it looks like a little doji going on. So we could definitely see if it goes down, have my limit order ready to strike as it keeps going down, going up. If you want to do like a swing play, of course you can buy at 165, sell at 278. That's definitely an option with that. But let's go on to our last stock, right? Stock number 3, the third stock under $5 I think you should buy, or you should at least look at, is Planet 13, ticker symbol PLNHF. Current price is $2.27. And there has been a lot of stuff going since the fourth quarter, with their earnings in the fourth quarter. Really just the fourth quarter, December in general. Since then, so much has happened with this stock. During this COVID and the war and everything, it's really been dragging this stock down, I believe. And you have, let me see if you can see my fingers right. Close on the acquisition of Florida cannabis license. So they have a dispensary coming up in Jacksonville, well, really Orange Park. So they got that going, and now they have a license in Florida. They can definitely expand in like Miami, Orlando, Tallahassee, Tampa. It's unlimited growth in Florida. And it says that, I believe, on their website is unlimited growth in Florida. They announced the acquisition of a Next Green Wave Holding, which is expanding its presence in California. We're really going to count the dispensary in Orange Park separate from the acquisition of the Florida license, because the Florida is unlimited potential, and this is literally just Orange Park, right? So the Orange Park opening, well, the roadmap for the opening, there's release of this first dispensary in Florida. The fourth quarter announcements, earnings were just spectacular. I personally feel like this stock will probably be a long-term undervalued. It'll be undervalued as long as federal regulation looms above its head, right? Because I feel like without federal legalization, this stock won't do into its full potential. Of course, you have like Denver or Colorado, shall I say, California, Nevada, where it's legalized, and you can see in California and this one in Nevada, in Vegas, they're both booming. It's producing revenue, and it's getting the money. Simple as that. And when they come to Florida, I can guarantee you, 'cause I live here, it's going to get the money, right? So until federally is legalized and it can go everywhere and open and move how it wants to move, it won't be, the stock and company won't be where it could be. But I still see, even with these little moves, that the company could do great things and get great revenue, right? And there, let's see what it says. I have our article I have right here. It says Planet 13 Holdings started the expansion of its Nevada cultivation facility, adding 22,000 square feet of cultivation space. And they, like I said, they acquired the next Green Wave Holding, which had more labels as well, and they've been buying more labels to make their in-house brand a lot bigger. And it says we've seen incredible consumer support for our brands like Trendy and Haha, which has risen to the top-selling brands in their respective categories. So people are loving their brands that they make in-house, and so them getting a 22,000 square foot will keep them from running out, which it says right here, our lack of supply has historically led us to selling out of every harvest, leaving our customers wanting more. So now you got 22,000 square feet of cultivation space. Customers want more, you give them more. You give the people what they want, right? And so the expansion of our Nevada cultivation, this is what Larry Scheffler says, that co-CEO, the expansion of our Nevada cultivation facility will allow us to better satisfy customer demand for our premium flower and continue to grow in our house brand shares of sales. And like I said in the previous video, their in-house shares of sales are continuously to grow higher. They're acquiring new brands all the time, and as long as their in-house product is the best, they can kind of wean out slowly but surely the out-house products, bringing and keeping in more revenue in-house rather than have to buy out the house. And so current stock price at $2.27. Analyst has this as a buy rating, and it has a target price of $4.66, right? And from where it is, that is a 105% return on investment. But like I said, until they can move like they want to, or they open up a boatload of stores here in Florida, it's just gonna be a slow grower. Because it definitely has the revenue. It's positive. It's making money. But until they can move like they want to, get them patents and get the licenses for like Illinois, Washington, New York, until they can move like they want to, it'll be a slow grower. But once it gets everything, this stock will boom. It could be a millionaire maker for us. But that's just me being optimistic at its most, right? Now let's look at some technical analysis for Planet 13. As you can see right here, took a symbol PLNHF. Currently, like I said, at 227. I've already marked right here at $1.98 as a resistance line. And you have another one. This was a former resistance right here at 247. But we're going to draw another one, shall I say. It's a horizontal line right here. Right? So these are the price target. First price target we need to hit is $2.47. We get smashed through that, boom, right? Then we can go to $2.68 and try to get through that. So those are the short-term price targets we're looking at. You can see overall though, it is in a downtrend. This is the overall look of it. Let me see if I can put this the hourly chart. I'm so sorry. What's going on with the hourly chart? Do the daily chart. Oh yeah, the daily chart wasn't looking the best. Even on a daily chart, you can see it's been red. It hit that resistance. It's coming back towards it a little bit right here. If it hits $1.98, buy orders will take place. I will get what I came for, and I will be on my way. And I'll be waiting for $2.47 to smash through that. It will come up. get to $2.68, and then at that point we can break through at least the 50-day SMA at least. Get a little hope that we can get on a positive trend. Like I said, this is going to be a long-term hold. Revenue's looking great. But those are the three stocks I have. Intera Bio, upside of, what was that? 129%. Biogenomics, ticker symbol BNGO, upside of 279%. Planet 13, ticker symbol PLNHF, upside of 105%. All three of them upside of over 100% in the next 1 year. In the next 5 years, it's so hard to say because that growth in 1 year is just immaculate that the next 5 years is just putting on your seatbelt and get ready for the ride. Like and subscribe.